So hello guys, uh, welcome to this recording. Um, I wanted us to go through the trades of this week. Yeah, so I hope you'll find this very educative. So normally, before anything else, first things first is that we normally start from our DXY. This is just a dollar index that tells us about how strong the dollar is. So with that, we are able to know uh, we're able to know because you'll find most of the pairs that we trade, for example, the GPB the Euro USD, they have the USD as the code currency. So whenever we analyze the DXY, if the DXY is going up or the dollar is becoming strong, it means now the Euro USD and the GPB USD, they'll be moving in the opposite direction. Yeah, so, and that is where we normally start from our DXY. So we are going to review last week trades, and then we are going to do a pre-market analysis for this week, for the coming week. So I'm going to clear my chart, remove all the drawings. So because it's the beginning of every week, so we normally start from our weekly time frame. So from our weekly time frame, what do you realize? You can see here. From this low, we had a sweep of these lows, relatively equal lows. So we had a liquidity sweep at that point. So on this day here, uh, uh, on this week, the 26th of January 2026, we had a liquidity sweep. So we had a liquidity sweep of the swing low, liquidity sweep. And you see from there, what did we realize? That the market reacted from these swing lows here, and after taking out sell side liquidity, we say now we go for the buy side liquidity. So our target has always been first to see this high taken out, this high first. Yeah, so, and that happened on the the first week of March. We had a liquidity sweep. So at the beginning of this week, we didn't have a clear direction of where the market was headed, because you see, on this day, we took out this high, and we closed below. So also this was a liquidity sweep. So at the beginning of this week, the week that has just ended, uh, we didn't know the direction of the market. So we had to wait for Monday to close so that we can know where the market was headed. So from a weekly perspective, uh, the beginning of this week, we didn't have a clear bias. So, but going down to the daily time frame, you see now, uh, uh this was on Tuesday. Monday, what do you realize? On Monday, we swept this high and closed inside. We swept this high and closed inside. So this was, we also see we also swept this high, the Friday's high on Monday. So on Monday, my bias was, I was expecting that the market would be bearish. And because after taking out the external range liquidity from a daily perspective, I was expecting to see the market come back to this fair value gap here. We had a fair value gap here. We had this fair value gap. It was a bullish fair value gap. So I expected the market to come, after taking out this high, to come back to this fair value gap first. But we didn't see that happening. So we didn't see that happening. What we realized is that on Tuesday, the market closed with it swept the Monday's low and also these lows here. It swept those lows, and we had a liquidity sweep also of the of this loss, and we had a C2 closure. So on Tuesday, we had a now from Tuesday we had a bias for the week. Now after sweeping these lows and closing inside the range, we had a C2, which is a reversal candlestick. So we expect the market would go higher. And what was our target? We would coming back to the weekly time frame. We expected to see price take out now this buy side liquidity here. You can see we have relatively equal highs here. From these are relatively equal highs. So equal highs, relatively equal highs. So we expected to see the market take out this liquidity here. And that was from our daily perspective. From Tuesday now, we expected that now this week we would be bullish now. So on Tuesday, we had a reversal candlestick, and then we had which is at C2. The reason I'm saying is a C2, when we are counting the candlestick, we usually say this one here is our C1. Our C2 is usually our reversal candlestick. Now we normally don't trade the reversal candlestick. We normally trade the expansion candlesticks, which are C3, C4, C3, C4. So the best day to have traded was on Wednesday, Thursday, and also you see on Friday we expanded higher. So this was an expansion, and you realize that we were in a consolidation. So we were in this consolidation here, in this consolidation. So we manipulated the lows and we distributed higher. Yeah, so coming down to our 1 hour now. This is now we have already established our bias from Tuesday. So we would expect now the market to expand higher. So on Tuesday, we would come to the 1 hour. The 1 hour time frame. Yeah, so this is when this was on Tuesday. So on Tuesday, after having these, on Tuesday coming back to the daily time frame a little bit, you realize that on Tuesday we had a reversal candlestick, right? So we would expect on Wednesday, because we are not looking to trade on Tuesday, we are looking to trade on Wednesday and Thursday and also on Friday. So we'd wait now because we are bullish. We have already established our bus for the week, which is bullish. Now on Wednesday we expect price. How do we form a bullish candlestick? We expect price to open. We have open, low, low, and then high, and then a close. So we'd expect to see first market open, go low to make the low of the day, which was here, because on Wednesday the market opened at this point, came down to make the low of the day, and then went high and then closed at this point. So on Wednesday when we are trading, we would come to the 1 hour. Where is on Wednesday? This is on Tuesday, on Wednesday, now here. So on Wednesday, we would wait for price to come down first to make the low of the day, which was here. This was Wednesday's low. This was Wednesday's low. We can mark it as previous Wednesday's low. Okay. Previous day low. So at this point, after that, you'd expect to see now a change in state of delivery. And where was our change in state of delivery at this point? So now this becomes our order block. This becomes our order block. And what do you realize? We have left a fair value gap here. We have a 1 hour fair value gap. We have a bullish fair value gap. Yeah, so after forming after forming a fair value gap, and then we have an order block or a change in state of delivery, those becomes very powerful tools that I can use. They become very powerful tools that I can use. We also realize also, we also have these, we also have these fair value gap here that was formed on Tuesday. And we also have like also a change in state of delivery here. Actually, this was our first change in state of delivery. And from Tuesday all the way to Wednesday, or through or all the way to Wednesday to through Thursday, you realize we have a bullish fair value gap that was holding prices. So we would have taken our trades from the beginning of Wednesday, because see, this is on Wednesday. We see price on Wednesday. On Wednesday, where did Wednesday began here? On Wednesday, price came back to this 1 hour fair value gap, and then we reacted from this 1 hour fair value gap all the way up. So if you had woken up early, you would have caught this trade, because you'd have taken your trades from this fair value gap, uh, aiming for a 1:2. So and your stop loss would have been this to this low, just for protection on the body of this that body. And then you'd have aimed for a ratio of 1:3. So yeah, 1:3 up to that point. So you'd have taken this trade. And if you missed that trade on Wednesday early morning, you'd have taken also this trade. But now this would not have been a deal, because you'd have taken your trades from this fair value gap, because you also have a proportion block here now. This becomes now this is our order block. The first change in state of delivery becomes our order block, and then the next change in state of delivery here becomes our proportion block, which is used for scaling. So you could have re-entered at this point. At the retest of this order block, you'd have taken your trades, and then your stop loss would have been here. And then because you've already established your bias for the week, you'd have aimed for a ratio, you'd have aimed for the next liquidity, which was here. Because we had already, from a weekly perspective, we had already completed the business of the sell side liquidity. So you'd have taken out this, you'd have held this trade all the way to this. Yeah, but yeah, so that was for DXY. Now when it comes to Euro USD and GBP USD, it is now the opposite. If the Euro if the DXY is going up, the Euro USD and the GBP USD, they normally go in the opposite direction. So if you have a strong dollar, we expect the Euro and the GBP to be weak. So coming to the GBP, we start from a weekly time frame. And I'm going to clear this. From our weekly time frame, what do we realize? We had swept this sell side liquidity, or this old high or swing high here. We had a sweep of that, and then from 26th of January 2026, we swept this low. So we are expecting price now to go for the next buy side liquidity, which was sell side liquidity, which is at this point, this is sell side liquidity, because now we have already taken out buy side. We have already taken out this buy side liquidity in form of a swing high, BSL. Yeah. So we also have this. We also left this fair value gap here, and you see price react on this week here. You can see price respected this fair value gap. So as I normally say, price usually move from an external range liquidity to an internal range liquidity to an external range liquidity. And this is classically what happened. We saw price take out the buy side liquidity, which is an external range liquidity, come back to a fair value gap, our weekly fair value gap, which is an internal range liquidity, and then price reacted from it. And then from an internal range now to an external range, which is this. Yeah, so what else do you realize? On this week, at the beginning of the week that has just ended, we didn't know our bias, because you see price reacted from this. You can see this candlestick, price reacted from this, from this swing low of sell side liquidity. So at the beginning of this week, we are expecting that price would be bullish because we have already taken out the sell side liquidity. So we would expect price to go back, but that was confusing because for me, as at the beginning of the week, as I've said, I was expecting to see Euro USD going up, and now down to the going down to the going down to the daily time frame now. That is from a weekly perspective. Let me clear this. What do you realize? Now this week began here. This was on Monday, Friday, Monday. You see what happened on Monday, and this was quite confusing for me because you see Monday we swept this low. We swept this low, and actually on Euro USD, you see on Monday we swept up to this low, giving us an SMT. So we swept that low. So we swept the Tuesday, the 3rd of March, which was on a Tuesday. We swept the low, when in GU we failed to sweep the low of 3rd March, giving us an SMT. An SMT, it's a smart money divergence, where we expect, because Euro USD and GBP USD, they are positively correlated pairs. So we expect if Euro USD is making a higher high like that, we also expect to see GBP USD do the same. We also expect GBP to do the same because they are positively correlated pairs and they move in the same direction. So what you realize here is that Euro USD in this example here, Euro USD made a Euro USD, you can see here, it made a low, while GBP USD made a higher low. So we had something like this. Okay, we had something like this. That is for GBP USD, and then Euro USD, we had something like this. Something like that. So you see here, this one made a higher low, whereas this one made a lower low. And this was a smart SMT. This is an SMT, it's a divergence. Yeah, so after that, after this had happened, I expected now this week will become bullish. So expecting to see price to go higher. But what happened on Tuesday? You see on Tuesday, we had this. On Tuesday, what happened? Tuesday, this was on Monday, this was on Tuesday. Tuesday gave us a C2, a reversal candlestick. You see, it is swept the high, these highs, and closed within the range of this candlestick. So after this on Tuesday, now we expect, this is a C2. So C2, as we have said in DXY, we expect now price to go lower. So we would expect to see price to go lower. So we would trade now a C3 and a C4 and a C5, which are expansion candlesticks. as this happened on this day. So now we'd go to our 1 hour. um, 1 hour, and you can see we have a very powerful entry, because now we wanted to trade on Wednesday, from Wednesday, Thursday, and Friday. But you realize, because GU was a bit stronger than EU. So if you are looking for clean sells on Euro, you'd have on these pairs, you'd have gone for Euro first. But GPB also gave clean trades. So we'd come back here. So what do you realize? On this was on Tuesday. On Tuesday we had this fair value gap. We had this fair value gap here, which was a bearish. This is a bearish fair value gap. So, and we had a change in state of delivery at this point. So I told you guys, a change in state of delivery and a fair value gap, these are very strong entry models, because now you see price came back to this fair value gap, filled this fair value gap, and went down. See, so I would have taken my trades from this point, from the midpoint, or the consequent encroachment of the fair value gap, placed my stop loss at that point, and continued, aimed for the next liquidity. This would be my first target, and you see that was accomplished. You see that was accomplished, and this is a trade that I took, but I got stopped out. I think I had placed a very tight stop loss, but this would have been a very good trade. Yeah, so this was on Tuesday. Then on Wednesday, price came back to, you see, on Wednesday, price came back to this fair value gap and continued. And that is why we wanted to trade the expansion candle, which are the C3 and C4, to the downwards. So if you had missed that, you could have also taken another entry here, because after having this, this is now becomes our order block. Now we had another propulsion block here. We had a propulsion block at this point. So if you missed that first entry, you'd have taken your trades from this point also. And this one would have been confusing. But if you went down to 5 minutes, I think there was a clean trade in the, I think it's a 15-minute. Yeah, because you had a fair value gap somewhere that was being respected. Yeah, well, I think it was the 5 minute. Yeah, it was the 5 minute, I think so, because that is why I took, no, I think it was in Euro USD, not GPB. Yeah, it was in Euro. But that is how we traded that week. It was a successful week, though I got stopped out at some point because of moving my stop loss a little bit earlier. But you'd have taken your trades at this point. Also, you'd have taken your trade. We also had another propulsion block at this point, and this was a bit better, because you see we had a propulsion block and we had a fair value gap at this point. And this would have given you a very nice entry, because you see price, we had this fair value gap. Price came back to this fair value gap and melted down. So I want to tell you guys that, remember, we have a change in a CISD plus fair value FVG. This becomes very powerful entry model, because price will always come to fill an imbalance. And as you can see in this example, price came, filled the imbalance, and melted down. So you would have taken your shots from the mean threshold of that aiming for the next buy side sell side liquidity, which was this low, and placed your stop loss just above this high here. And you see, you'd have made you'd have 1:8, almost one headed to 1:9, and this was a very powerful trade. Yeah, so the same with EU. EU and GU move in the same direction. So we had a similar profile for the day, but EU was a bit weaker. So if you're looking for shorts, you'd have gone for EU. But also GU was better, because you see it eventually went down. So coming back the same, we had an SMT at this point. An SMT, we had a C2, so we are looking to trade a C3, a C4, and a C5. Yeah, so but we normally trade C3, C4, which are expansion candlesticks. So after this, we'd expect now price, and I want you guys to remember, if you're expanding downwards, price will always open. If you expand down, price will always open, make a high, and then make a low, and then close. So you see here at the beginning of this, you see on Wednesday, price opened, went higher to make the high of the day, and then went low to make a low, and then a close. That is how we expect price to behave. So since we are looking to trade now, because on Tuesday we had a classic, this is when we are looking at the weekly profiles. When you're looking at the weekly profiles, so we normally have three types of profiles when it comes to the weekly. We have a classic, expansion week, we have a classic expansion week, we have a Tuesday, Tuesday reversal, or midweek. I like to use the term midweek reversal, and we have consolidating and reversal candle, week. Yeah, so these are our weekly profiles, the ones that we look at. And this week we had a we had a midweek reversal, or Tuesday reversal, expansion week. So you see on Tuesday we reversed, and this is a reversal candlestick. So when you have a midweek reversal, we had Tuesday made the high of the week, so, and then closed within Monday's range. So now from Wednesday through Thursday, we'd expect to trade expansion to the downwards, because we have already established that we have a reversal candle on Tuesday, and Tuesday made the high of the week. Because you remember, a weekly candle is made up, because this is our weekly candle here, you can see our weekly candle is made up of 5 daily candles, and you can see from here, this high here, we had Tuesday making the high of the week. So and how is that high made? Price came on Monday, we had an expansion to the upwards, and then Tuesday manipulated the highs, these highs here, and closed within the range, so giving us a reversal candlestick. Now Wednesday, Thursday, and Friday, we are looking to trade downwards. So if you can go and look at the weekly profiles, but this week we had a Tuesday or midweek reversal profile for this week. Yeah, so, and just to mention the classic expansion week, This is where Monday or Tuesday forms the high if it's a bearish, and or low if it's a bullish. So if you are expanding higher, we want to see Monday making, on Tuesday making the low of the week, and then the next of the days they are expanding higher. This would have been also a classic expansion, because on Tuesday we made the high of the week, and then we expanded to the downwards. Yeah, so this one was a bit clear because we had clean trades here in euro. This was the one that I took. Didn't It was very clean, because you can see I took my entry from this point. We had a change in state of delivery at this point, coupled with a fair value gap. You see, we had let me clear this first. We had a bearish fair value gap here. The bearish fair value gap between this candle number 1, candle number 2, and candle number 3. We had this bearish fair value gap, a bearish fair value gap, and you can see price came back to this fair value gap and reacted from it. So I took my shots from this point here. I placed my stop loss just above this high, the closure of this. Just here. And then I was aiming for the next drawn liquidity, which is this sell side liquidity, these lows here. And you can see price melted to our target, and we took our, you see, yeah. So yeah, and price continued even lower. So yeah, those were the trades for this week, and I hope you have learned. So I'll make a video for now what you expect this coming week. Yeah.